Hi, everyone, and welcome to the Coinbase Institutional Markets Call. I am your host, David Duong, the head of institutional research. I'm filling in for Ben Floyd, who's currently on vacation, eagerly waiting to come back and think about crypto markets. I'm also joined by Gregory Sutton, a trader from our Coinbase Execution Services Desk, and David Hahn, who works with me in research. Today, we're going to be talking about Mt. Gox, liquidity in the markets right now, ETH ETF expectations, and some technical updates on Solana. But before that, please scan the QR code or visit a link in the show notes to see our research. Please also like and subscribe to this podcast so it encourages us to produce more excellent content in the future. And with that, let's get started. So it seems that things have been pretty rocky over the last week or so. We've seen that the price action hasn't been great in the crypto space, and it culminated in a pretty major sell-off yesterday. We're seeing that the 200-day moving average is at around 57,000. So there does seem to be some support. But I'd like to bring in Greg right now to kind of talk about this move down. It seems that a lot of people are attributing it to the Mt. Gox situation. I'm a little skeptical myself, but Greg, I would love to hear what you think.
Yeah, thanks, David. So, yesterday we got news that Mt. Gox is getting ready to finally make those distributions, around $9 billion of Bitcoin. They'll start next month, July 2024. And that certainly, in my view, spooked the market. It was one of the reasons we saw Bitcoin underperforming other assets such as ETH and other higher beta assets. That being said, we did see some interesting kind of data points that I'd like to touch on. The first one being that perp funding rates for Bitcoin were negative for most of the day. And that's a sign that a lot of the long length was cleared out of the market, which is generally a good thing. Because when you have sort of this, we've been in kind of this structural bull market, it wouldn't make sense to see sizable shorts in the market for a long period of time. And we did see those funding rates flip back positive towards the end of the day as Bitcoin recovered. The other kind of interesting data point was looking at the term futures curve. Front month, so June, that's getting ready to expire in just a few days, was also negative. But second month, July, that contract was still trading 70 basis points above spot for most of the day. And that indicated to us that at least the TradFi participants that generally trade those regulated futures contracts didn't see this as a market that they wanted to short, and maybe thought that this sell-off would be short-lived. And that's actually what we're seeing today with a little bit of a bounce. So we'll have to see if that continues. But overall, I would say the price action was surprising, but it felt healthy towards the end of the day.
Yeah, I gotta say, one of the reasons why I've been a little bit skeptical about the significance of Mt. Gox is that it's been so long since we've been dealing with this theme. And, every year it seems to keep rolling over, and they're saying oh, we got to postpone the payments. And of course, now we're finally here. But I mean, hasn't the market priced this in already? For me, I definitely would be glad to see this done and over with. But do you think that people are still paying attention? So every time there's a headline, people need to react to it?
Yeah, I mean, listen, I'm with you, David. I think, it's this event, if we want to call it that, is getting a bit long in the tooth. I'm very excited, I would say, that we'll finally be able to put this behind us. I think that will help sentiment because, you and I have been on numerous client calls where this, overhang, I'll call it, comes up. And it'll be nice to finally put it behind us. How much is priced in is hard to say. This is a very sentiment-driven market. And I think, news that this is finally potentially coming to market obviously is going to weigh on sentiment. Couple that with the fact that for a few weeks we saw, quite healthy inflows into the Bitcoin ETF, and Bitcoin wasn't moving much higher. I think kind of you take both those things together, and if you're a short or medium term trader, it might make sense to kind of take some off the table here.
Yeah, that's a good point. And we have heard that recently long-term holders have sold around like $1.2 billion worth of Bitcoin. So, I think that there could be some kind of reaction to this. I would be curious, do you know how hedged are these third-party creditors who bought like a lot of these claims and probably hold most of the Bitcoin that's going to be paid out?
Yeah, it's a good question. The short answer is, no, we don't have any precise estimate. I think it's impossible to have a precise estimate of exactly how much is going to come to market. You're right. Likely the larger sort of distressed funds that bought these claims a long time ago either hedged some of that exposure. They could have potentially even sold those claims. And then, all the individual creditors, it's harder even to handicap what they're likely to do. But as I think about it, we're very early crypto adopters. I don't see. I think it's unlikely that they're going to come to market in mass and sell their Bitcoin. So again, it's impossible, I think, to have a precise estimate of what kind of flows we're going to see here. But if I had to make a guess, I would think we see between 20 and 25%, or 20 to 30% of this Bitcoin come to market, and over time, not immediately.
Yeah, but you're right. I mean, so much of this is behavioral that it's really hard to kind of gauge this stuff. Of course, Mt. Gox hasn't been the only thing that's been weighing in the market. David, maybe we can bring you in here because we also saw that the German government is sitting on some Bitcoin that they're also selling. Can you give us some updates on that?
Yeah, certainly. German government has about $50,000 or 50,000 Bitcoin in custody and in their management, which is around $3 billion US. And over the last few days, they've moved about $900 or 900 Bitcoin of that on chain, which leaves them with around a total of 3,000 Bitcoin that they've sold, with around 47,000 Bitcoin that they still hold. I think that this news normally wouldn't be a crazy large flow. 900 Bitcoin is a good chunk of money, but inconsequential relative to the volumes that we see day to day. What I think has kind of spooked people is, in light of the Mt. Gox early distributions in July, that was, I think, honestly a bit earlier than some people had anticipated. I think that people are kind of just like looking for other sorts of overhangs and other sorts of flows, and they're kind of hanging on to this news. So I don't know, we don't know actually about their full plans for selling. It's very unlikely that they're going to sell this Bitcoin in one go. So that's all very speculative. And I think it's just more that the market is kind of clinging onto this news in light of the Mt. Gox distributions.
Yeah, and all of this stuff seems to be happening at a point where liquidity is also just lower. Greg, I mean, I'd love to kind of get you to comment a little bit about this, particularly since you've been looking at the long liquidations as well. I mean, what's your thoughts around this at the moment?
Yeah, I mean, right now, you hit the nail on the head. Liquidity is lower. Makes sense that liquidity is lower. We're going into the summer months. Summer's generally quieter. Yesterday, we did see, what I would characterize as a lot of liquidations. So, almost 300 million in long liquidations. And what we're seeing on the trading desk is, order books are moving around, in a pretty volatile fashion. And, that kind of just, it's to be expected when you're at the end of June going into July, kind of summer started, volumes are declining. You get any kind of event and you see these higher volatility.
Yeah, and we are going into July 4th week. I mean, there's also Canada Day on July 1st. I'm not Canadian, but I just thought it was a good plug. But we also think that these potential outflows with respect to Mt. Gox could be happening at the same time that people have been talking about the ETH ETF launch. And David, we recently saw, I think, VanEck making some 8A filing updates. Could you just comment a little bit about that and kind of the expectations around like dates of when these ETFs could actually launch?
Yeah, I mean, the AA is just another form, one of many forms involved in the ETF launches, or any ETF launch really. And VanEck during the spot Bitcoin ETF launches, they filed this 8A form 7 days before the ETF started trading. This is kind of highlighted by the Bloomberg analysts. That's led to their analysis that they're probably going to start trading in early July if historical patterns hold. And this kind of gives us a sense that things are definitely moving along on the ETH ETF approval process. We've also seen some updates in the S1 filings as well. Some fees have come out. I believe Franklin Templeton was at 0.19, and VanEck was at 0.2% fees annually. And I think that we might also see some last minute filings of fees in the ETH ETF competition space around this as well, just like we saw with the Bitcoin ETFs.
Yeah, exactly. Like we've seen this game before, but I would love to kind of get a sense of, I think a lot of people with respect to the ETH ETFs have also been concerned around potential rebalancing away from, say, ETH, like Grayscale's fund. So I think that's going to be a part of the key. But Greg, we're heading into a low liquidity week because of the U.S. holidays, Canada holidays. It makes me a little bit nervous about the ETH ETF launch. I would love to kind of get a sense of what you think could potentially happen here.
Yeah, I agree. I mean, I think launching any new product the week of, Canada Day and July 4th is tough, right? It's tough because there's not a lot of traditional market participants or just crypto market participants, in that week. People go on vacation, their focus is elsewhere. So I think there's, a reasonable fear that if these products do launch over that week, initial demand might be lower than it would otherwise. And that's a problem only because this is such a sentiment-driven market that, if demand the first few days is lower than we would like it to be, and it's lower only because it was launched during a holiday weekend, then there is a risk that these products could get off to a rockier start than they would otherwise. So yeah, it's certainly something. It's nothing we can control, but it's something that we're going to have to keep an eye on.
Yeah, I feel like for ETH as well. I mean, there's too much focus on the flows themselves, and I think in part that's because it's the analog to Bitcoin, and we saw the spot Bitcoin ETFs, and obviously the flows did have a effect on performance. But we also forget that Ethereum has like a whole DeFi ecosystem that's also going to be affected by this as well, because if ETH even moves up just even slightly, that affects the collateral that's sitting in a lot of those DeFi positions, for example. So I think that's something that this market's missing. But that said, let's kind of turn it over to the spot Bitcoin ETFs, because we have seen outflows, and it's been happening, I think, now a little bit over a week. David, could you just kind of walk us through that?
Yeah, just some quick updates on the ETF flows. The last 2 weeks, well, since June 10th, we've seen $1.3 billion of net outflows. This is in contrast to the second half of May and the first week of June, where over those 3 weeks, we saw $4 billion of total inflows. And that was, I guess, on the back of all the legislative happenings with the SAB 121 repeal being passed in the House and the Senate, and the FIT21 Act being passed in the House as well, and crypto really becoming a campaign and political issue. The last 2 weeks have been a bit quieter. So I think these outflows are a bit normal. Some of it might be attributed to the basis trade. Some of it might be people de-risking. But there has been some ETF outflows in line with just sideways / slightly downwards market performance over that same period.
Yeah, it's a really good point about the political situation. I mean, I think that the political environment still has been more crypto supportive in the US. Of course, I think things are kind of pivoting away from legislative, maybe back to the court system. I'm personally looking ahead to the Supreme Court decision on Chevron deference, which I think should be happening in the next few weeks. But more closer to home, we've got the election debate happening on Thursday night, Trump versus Biden. I don't know, Greg, any thoughts around whether this could actually be meaningful for crypto?
Potentially, I guess. There's a hope that one or both of the candidates will mention crypto. And if they do, it's likely they would mention it in a positive fashion. And that, again, could boost sentiment for our market. So there are some folks kind of positioning around that event. I think, even more important is something you touched on earlier, is just the changing winds, or the seemingly changing winds. In Washington is very important for our space. And it's something that, a lot of our clients are watching very closely, and, trying to position and weight towards, likely winners, if we do get a friendlier posture from regulators.
Yeah, I myself, I'm kind of doubtful that it's going to be raised by either of the candidates on Thursday, but the fact that it's a possibility, I think, is very exciting. And certainly, the idea that I think members of the Biden administration are actually going to a crypto conference organized by someone in Congress. I mean, like, all these things, I think, are just manifesting positively from the crypto side of things. But kind of moving away from the political environment a little bit, Greg, we've had some important unlocks in this space. We saw like ZK Sync, Layer 0, for example, unlocking some tokens. It seems that a lot are still happening, but what's your thoughts on like what's this doing for the market? Is it putting pressure on it? Is this something like positive because like it seems to be driving activity in the space? Like what's your thoughts?
So 2024 has really been a tale of two markets, really. Bitcoin, and then everything else. And altcoins have really surprised to the downside this year. I would have thought, given kind of where we are in the cycle right now and the performance of Bitcoin, that the higher beta altcoins would have caught more of a bid. They haven't, and they haven't really because 2024 has also been the year of unlocks. Hundreds of millions of dollars, sometimes billions, unlocking every month. And we've talked about that before, but it continues. And it's really just weighing on the altcoin sector. And when it ends, we can look at the schedule and find out, when these will taper off. It's not anytime soon, unfortunately. So until then, we sort of have this capital mismatch, which is great if there's, some of these projects that traders really like. It allows them to scoop them up on the cheap. But for the shorter term, tactical traders, it does make it a little more difficult. So yeah, it's just really more of the same there, unfortunately.
Yeah, and that's like something that I've been wondering about, and this question kind of goes to both of you. Like, were the markets wrong for considering that we're in altcoin season? Was that like was the premise itself like not correct? Open question to both of you guys.
Yeah, I think the market was a little bit wrong here. I think a lot of participants have been looking to previous cycles, namely 2017 and 2021, 2022, which had very different conditions. Right, 2017 was essentially the ICO mania, where people were just really new to the space. There really was no ground for valuations at the time. People were even questioning, Bitcoin versus Litecoin versus all these other coins. Like, is Bitcoin even a good asset? 2021, 2022, you had a very different liquidity conditions, zero interest rates. There wasn't as much sort of a search for value. And I think the surge in namely Bitcoin that we saw in 2023 was actually on the back of the US debt ceiling crisis in January, where we saw the first move up. That's where the market bottomed out. We saw a secondary leg up in the banking crisis during March. And so some of these early tailwinds for Bitcoin, and also the ETFs in the first quarter of this year, have been very Bitcoin specific. And it hasn't led to just some pure capital rotation into any token, really, outside of Bitcoin, and to an extent, a few of the majors. So I think that capital is still quite selective. We've also seen this with lower fundraising rounds. I think we mentioned this in the previous call as well, where the fundraising that's been happening in crypto in this cycle has been less than we've seen in 2021, 2022. And I feel like some of those tokens are still just unlocking now. So it's been kind of hard to convince new people to put new allocation into some of these other altcoins when they're only now unlocking from previous cycle investments. So it is a very different condition compared to what we had 3 years ago.
Yeah, I wonder if that's also because it's by the nature of the fact that the capital is flowing into the ETFs. that's typically not capital. Like if it's held at an institutional level, that's going to make its way into the altcoin space, for example. I don't know, Greg, does that make sense?
Yeah, I mean, I think there's two separate pools of capital now, right? And where it used to be, you invested in crypto, and you might be just as likely to buy Bitcoin as Solana or Cosmos or any other token. Now Bitcoin and soon hopefully ETH will have access to a much larger pool of capital that's currently siloed off from kind of the rest of the altcoin space. So we could continue to see, some of this underperformance.
Yeah. Let's see. But one of the few things that has been pouring pretty well over the last week. In fact, it's now one of the fastest growing chains year to date in terms of TVL. We've been seeing Ton actually moving a lot. David, can you kind of just walk us through this? What is the thesis behind Ton and Telegram, and what's the usage going on?
Yeah. So Ton was actually a network or a blockchain that was built by the Telegram team and then separated out after some regulatory hurdles. But it's seeing some integration into the Telegram messaging app outside of the US. There's been a lot of tailwinds. Paradigm recently finished raising an $850 million round for Ton-focused applications. And they have been actually, I think, just the fastest growing chain by TVL year to date as a percentage of growth. And I think one thing that's interesting here is that there's been very little technical debate that I've come across around its sharding approach to scaling, very little about its validator decentralization, very little about its tokenomics. And the thesis around Ton has just been pure user adoption and integration with the Telegram interface. And I think that's very interesting in contrast with what we've seen with debates around Ethereum, Solana, modularity, monolithic architecture, data availability. Like all these topics, nobody is really talking about when it comes to Ton. I think that this is kind of the direction that more and more, I feel that more and more crypto projects are going to focus more on user acquisition. I think this is kind of a pattern we've seen with Web2, where people understand that the internet, or people understood that the internet was really important. But at the end of the day, users and real sticky retention, and not just pure airdrop driven retention, is really important. And so we've seen, Coinbase ourselves, we're working on the smart wallets, and we've seen a lot of interesting upgrades as well on the Solana side too recently that might help with these things. Just better user experience and user applications, and also on the L2 side with OpenFrame. So I can talk a little bit about.
Yeah, I want to get into those technical updates with Solana, but like what you said, it's kind of a spicy take, right? Like, I mean, that's what you're saying is that we're really following the Web2 playbook, and that what really matters for user adoption is just kind of like the inbuilt kind of experience that was already inside of Telegram. They already had a lot of users who were on that platform. And it's not as much about the technology itself. I mean, is that what you think is going to continue happening here?
Yeah, I definitely do believe that. I think that we've already hit a point of reasonable saturation with people who are technologically savvy enough and have the time and the motivation to really deep dive into understanding the differences of blockchains, understanding how do you best custody a seed phrase. And really, when we're talking about mass adoption, I don't think people, especially people who are crypto native, don't have a very good sense of, people just don't want to know what a seed phrase is, right? They don't want to have a ledger wallet. They just want to just not think about anything that goes in the background, right? And I think this is a fair thing. I draw this analogy where, if you use Google and you don't care about how they scale their response times, it's the same thing, right? Most people who use Google have very little interest in how they've managed to query the whole web in a matter of milliseconds. Serving hundreds of thousands of requests per second. And it's the same thing when it comes to crypto. I think most people who are not in crypto full time or who have a hobby in the space, they just don't really care about this kind of stuff. And so I think that we're going to see more and more abstracting tools. Like I said, Coinbase Smart Wallet is one of these, or just in general, wallets and tools and technologies that allow the user experience to be streamlined, so that people don't have to think about this stuff.
Yeah, and counter abstraction, of course, being a pretty big theme, but not just on Ethereum anymore. Let's kind of turn it over to Solana, because it seems a lot of technical updates that they're making right now actually borrows from some of the changes that have been at least considered or adopted by Ethereum. There's magic blocks, Zk compression. I mean, could you just kind of talk a little bit about what you've been seeing?
Yeah. I think some of them actually might even be unique to Solana. Maybe I'll just go in order of ones I think are most important. One that was announced just this morning, 2 or 3 hours ago, is this concept of blinks, which is blockchain links, which essentially allows you to embed actions on the Solana blockchain in various forms, whether that's a link that you can share, a QR code that you can scan, a button that you can post. And this is very cool because it allows people to redirect you to a Solana action. For example, if you want to book a trade or do some sort of action in any sort of dApp or decentralized application, you can just share a link and that would redirect you to the appropriate interface. This is kind of similar to what we've seen with Farcaster with frames. There's also a open frames framework that's being built on Ethereum that's kind of extending this to allow interactions from different types of applications and different types of clients. So we're starting to see more and more of these expansions. 2 other things that you mentioned, Zk compression and magic blocks, have also been pretty interesting. Zk compression also kind of borrows a little bit from, I believe, Ethereum technology. It was built in conjunction between Light Protocol and Helios Labs, which allows, it's a way to compress accounts and reduce state storage costs on Solana. So it's not a panacea for everything on chain. Not every single account is going to be compressed, but there is a way to kind of aggregate actions and put them in a compressed form on chain that makes use of zero-knowledge proofs. Currently, it's on testnet, and there's been a lot of debate around the naming of it, whether it's some sort of stateless client architecture versus a validity proof, etc. I think that's kind of dancing around the point. It's missing the forest for the trees. I think it's just a new promising primitive for developers to leverage. And the last thing was magic blocks. This came across my radar. I thought this was very cool. I think this one is actually unique to Solana, where it allows low latency on-chain applications where they delegate a specific account to a validator, which does all the high throughput operations, and handles all their incoming, outgoing requests. And it's targeted for gaming, but it could see potential elsewhere as well, wherever you might want to see low latency on-chain applications. So I think there's a lot of innovations that are happening on Solana, just as there are on Ethereum, right? Meanwhile, on Base, we have smart wallets. We have a lot better account abstraction, I feel like. And so the general trend that I'm seeing is just more towards technologies that can help improve the user experience for people who are not in crypto. And I think that's very promising for the space.
So with magic blocks, that would be like an L2 of sorts, using magic blocks and, writing eventually to the L1. You can
think of it that way. I'm sure there's going to be a lot of debate around the terminology. My understanding is that you can almost think of it as like an ephemeral rollup. Not exactly, where essentially the on-chain state is frozen and delegated to a specific validator. And then for the interim, all the incoming and outgoing requests go to the validator, because a validator has very high throughput, powerful hardware. It can handle all these transactions bundled together. And when you want to write to the blockchain, it can take care of the writing. But in the interim, all the read, all the access can be done via the validator. That will allow you to have like these really low latency applications because you're only going through a validator. You don't need to find consensus in the network until you actually do something that requires writing on chain.
Thanks so much, David. I love all the updates on Solana. I think in the past, we've kind of overlooked it, and there's been so much focus on Ethereum, but this ecosystem is moving so quickly that there's always something to kind of pay attention to. We won't be here next week because of the U.S. holidays, but before we kind of leave, like Greg, I'd love to kind of bring you in here because I think that you've noticed a lot about seasonals in July. Anything that you want to kind of highlight here?
Yeah, thanks, David. I do want to just point out, because we're not going to be here next week, that we are moving into the month of July, which is a slow month, but has historically been a positive one for Bitcoin, at least. I was just looking at the seasonals, and for over the past 5 years, Bitcoin's been up an average of 11% in July, and it's always been up, had a positive month when June was negative, as it was this year. So we don't know that history will repeat this time, but again, it's a data point to keep an eye on, and one that could make the next month pretty interesting.
Yeah, let's hope that plays out the way we've seen in the past. With that is our show today, everyone. Thanks to Greg and thanks to David for being on and lending us their expertise. So as we mentioned, we won't be here next week because of the U.S. holidays. Hopefully by then, Ben will be back, so you don't have to listen to me anymore. But thanks, everyone, for listening.